Hi everyone, I'm James. SK Hynix has just reported another extraordinary quarter. But I don't think the most interesting story is the earnings. The bigger question is whether AI is fundamentally changing the economics of the memory industry. The results were exceptional. Revenue increased 51% from the previous quarter and 257% from a year ago. Operating profit rose 61% quarter over quarter and 557% year over year. Gross margin reached 83%, while operating margin climbed to a record 76%. Yet, despite these results, SK Hynix still trades at a single digit for a PE. That suggests the market remains skeptical about whether these earnings are sustainable. And investors have good reasons to be cautious. The memory industry has always been highly cyclical. The pattern is familiar. Demand rises, memory prices increase, companies expand capacity, supply eventually catches up, prices fall, and profits disappear. So the question is not whether SK Hynix had an exceptional quarter. The question is whether AI has fundamentally changed the boom and bust economics that have defined the memory industry for decades. So what might be different this time? The answer begins with HBM or high bandwidth memory. Unlike conventional DRAM, HBM is becoming a much less commoditized product. Success is no longer determined simply by producing memory at the lowest cost. HBM requires advanced packaging, vertically stacked memory chips, strong manufacturing capability, and extensive customer qualification before it can be deployed in AI systems. In other words, technology leadership, manufacturing expertise, and the ability to deliver reliable product at scale are becoming much more important. This represents a significant shift from previous memory cycles, where cost efficiency was often the primary competitive advantage. But technology is only part of the story. The relationship between memory suppliers and customers is changing as well. In previous memory cycles, customers typically purchased memory when they needed it. Manufacturers expanded capacity largely based on expectation of future demand. If demand weakened, orders could be delayed or cancelled, quickly leading to oversupply and falling profitability. Today, management describes a different approach. Many AI customers are entering long-term agreements to secure future supply. These agreements can include purchase commitments, customer deposits, and collaboration on future generation of HBM aligned with customer technology roadmap. As a result, SK Hynix is no longer simply supplying memory chips. It's becoming more deeply integrated into the AI ecosystem, giving both the company and its customer greater visibility over future demand. This could make capacity planning much more predictable than in previous memory cycles. It also makes technology leadership more valuable. Management highlighted manufacturing yield, product quality, the ability to produce HBM at scale, and years of customer trust as competitive advantages that cannot be replicated quickly. If these advantages persist, AI might be changing the competitive dynamics of the memory industry rather than simply creating another demand cycle. Of course, there's another possibility. Perhaps nothing has fundamentally changed. AI demand is extraordinary today, but that doesn't necessarily mean the memory industry has become less cyclical. Over time, competitors such as Micron and Samsung could narrow the technology gap while additional capacity enters the market. As HBM technology matures, it might become more standardized, reducing differentiation between suppliers and increasing price competition. If that happens, margins could normalize, pricing power could weaken, and the industry might eventually return to the traditional boom and bust cycle. History has a habit of repeating itself. The question is whether AI has changed the industry economics or simply delayed the next downturn. So the biggest question for investors is not simply whether SK Hynix can continue growing. The more important question is whether the market will continue to value it as a cyclical memory company. Historically, memory companies have traded at low valuation because investors know that periods of record profitability are usually followed by oversupply and falling prices. That explains why SK Hynix can report record margins while still trading at a single-digit forward PE. The market is effectively saying, these earnings are impressive, but they may not be sustainable. If AI creates a fundamentally different memory industry, the opportunity might come from two sources. First, continued earning growth as demand for AI infrastructure expands. Second, potential PE expansion if investors become more confident that these earnings are sustainable. A company viewed as a cyclical memory producer will typically receive a lower valuation multiple. But if SK Hynix becomes viewed as a critical supplier to the AI ecosystem, with stronger competitive advantages and more predictable earnings, the market may assign a higher valuation. Ultimately, the key question is whether SK Hynix remains a cyclical semiconductor company or whether it is becoming a different type of business with structurally higher earnings quality. SK Hynix's latest results were exceptional. But the real question is not whether the company is benefiting from the AI boom. The question is whether AI has fundamentally changed the economics of the memory industry. If HBM creates a more differentiated and sustainable business, SK Hynix may deserve to be valued differently from a traditional memory company. But if history repeats itself, today's record earnings could eventually prove to be another peak in the cycle. So what do you think? Has AI truly changed the memory industry, or are we simply witnessing another boom before the next bust? I hope that's helpful for you. Stay focused, everyone, and I will see you next time.